Hey guys, if you had an opportunity to understand that we have a story going on, it's narrative driven. Some of you cannot find out enough about one thing and then another thing happens. I know we update often. So that's why one of the first things I want you guys to do is go to the comments and tell me how often do you want this channel to upload, right? Because we're doing roughly somewhere between 4 to 8 uploads a day. If that's too much and it blows up your bell notification, we want you to be able to smash that subscribe and notification bell. So that's why we want to be able to listen to you. With that said, if you guys had not heard yet, we are talking to Netflix directors and producers about this narrative-driven story. And there are 10 historical dates from user suspicious-singer243 that we want to be able to cover, right? One of the first things that we got out of that director was that he cared a lot about making sure that this story made sense to someone just walking into the room, never had heard of GME, never had heard of a short squeeze, never had heard of stonks before. So let me tell you right now, this will be a comprehensive end-to-end discussion of the 10 most important dates in the month of March as we move into the month of April, and lots are going to change. The only thing I ask is helpfully, please go out and drop a fat like on this video to go and distract the YouTube algorithm from this video, and we can defeat it together. So let us just jump on through, show the source some love. We're going to have it in the description from user suspicious singer243. Too long, didn't read. Once again, as a reminder, we're not financial advisors here. Time is running out. $183 area is the critical area that needs to be broken with momentum to force short hedge funds to begin covering the massive amount of shares from March 10th, which may spark the squeeze due to uncontrollable momentum, right? We want to be able to focus up on these 10 days with no knowledge of the GME situation whatsoever. So if that didn't make sense to you yet, it will. Watch until the end of the video to find out. Thesis. There are 10 days that matter immensely in the storyline that brings us to this week. The events on each of these days significantly affected those following and will continue to define the how, when, why the squeeze gets squoze. The DD will be narrative in nature in describing each event and its relevance to the events surrounding. So if you guys had not seen a single GME video yet of the story, this will be able to catch you up from the beginning of March. March 8th. Price climb starts from $154 and picks up speed. I'm going to be tracking along with this story here. Let's go all the way back to March 8th. So this is right around here. That's March 9th, and this is March 8th, right? We've been trading sideways for a good amount of time since then, right around 143. But this day on March 8th is when we started to pick up important speed right here, right above my head. So on this day, it starts from 154 and picks up speed. It builds momentum by cracking $200. Short attack right down to 175 to cripple momentum. What does that mean? Well, we know that when we are passing brand new milestones and breaking through barriers, one of the most easy ways to force us to realize that maybe there's a correction or maybe people in our party are paper handing is to try to force that illusion by using demonstrated and calculated shorts to be able to break that momentum down, right? It hurts not only us, but the long whales that are on our side. And so that is what happened to be able to bring us up to 200 and then right back down to 175. This kind of worked. Consolidated around 183, then they possibly started covering these borrowed shares. Price climbs a little bit slower, so we started to slow down the momentum, but this was one of our major days that we actually started to see the $183 mark. March 9th, the next one. Let me scroll over to March 9th. So there's that crack to 200, and in the after hours, we climbed a significant amount and actually opened the day above $200 and stayed there for much of that day. Oops, gap up and go. This is clearly a liquidity issue here as price moves very easily through the March 8th close of $194 to a new high of the day at $249. Likely FOMO kicked with the retail buying. A solid steady rise up. I remember thinking, did they give up? This seems weirdly calm, slow, and steady. Closes at $247.90. Now, for a normal stock, if you guys don't know anything, it's likely that you are thinking, okay, from 154 the day before to 247, that's $100 up on a $150 stock. So that's 66% up, right? That seems like pretty high, and it is. Do not forget that GameStop is constantly trying to find its true value after waving through the fields of manipulation. March 3rd, boom, sorry, March 10th. Boy, I wish I could read. March 10th. That is the day that we cracked up to the next part of our gamma squeeze, all the way to 350, and then flash crash all the way down to 170 before recovering. It's getting out of hand. Price goes up to 20% in pre-market and open at 270. No one is at the wheel. Maybe Jesus, I don't know. It's a race to 350 and beyond. Time to get swos. Then they Thanos the Avengers HQ and nuked the poop out of the price back down to 180. So we see that 180 once more. Given the scarcity of shares to borrow narrative and likely desperation, these almost certainly had to be naked and were required to be returned with 21 days or failed to deliver. DD on this by Pixel just didn't have enough pressure from both sides of the timeline. He gave decent probability to. Number 4. Days, nearly 2 weeks pass with low liquidity and virtually sideways trading. Sure, there were down days, but if you zoom out, we're pretty much going sideways, and that's just not how stocks trade ahead of their earnings call, especially highly anticipated reports. If you guys remember, we covered that basically the entire way up to the earnings call and that fateful day where we saw a major decline. So, breaks the fourth wall. Remember back to when we were about to snap and bring everyone back before we launched a massive short attack? Well, one thing to remember is that if you borrow something, you have to return it, but instead sell it, you eventually have to give it back. That's the whole point of why we're on this Reddit daily. If you guys remember, that is the definition of the short squeeze. They have to give it back, and they might have to give it all back at the same time, which is going to cause the price to go skyward. March 23rd. Let's skip forward to just a week ago. March 23rd is right here. And this day opened up strong and then ended up with a $30 dip. The call, it was overhyped. This is the earnings report call. Heck, we went out and bought bourbon and canceled grown man commitments so that they can drink brown stuff in the basement and learn about the future of the company. Meanwhile, Citadel is thinking this is an overhyped earnings call. We had perception, right? Expectations were way too high, and we can make even more money on these shorts from the 10th by dumping a likely boring earnings call by shorting the heck out of it and pretending with the plausible deniability that this was actually just paper hands trying to get out of the market, right? No, unfortunately not. Their shorts from $348 are in the black, baby. So they shorted on the very top and they made a bunch of money coming on the way down. March 24th, they go for the headshot. They let the MSM, the mainstream media FUD, which is fear, uncertainty, and doubt machine, spin a boring earnings call to dump it below the psychological $100 level. And this day was a terrible show, right? We were very scared. It fell from a... what is this? Basically $200 the day before, all the way down to 100. That's 50% down. Remember that 66% up? Right. So there are ups and there are downs. Let's see. Breaks fourth wall again. One thing we failed to mention about that call, while boring, Sherman said two things. One, 175% growth in e-commerce, and two, we are obsessed with becoming a technology company. Game, set, match. Bear short thesis is disproved. Buyers will show up. March 25th, 50% green day, right? We are seeing the bottom of the barrel get tested twice at 118, and then boom, saw that W went straight up. Technical analyses do not lie. We tested the same support twice, saw that there was basically no way to get down below this level, and people who had this right risk tolerance went and bought the stock, bought and hold. So this is a 50% green day. We are back. They couldn't dump it past $100, and buyers and whales showed up like it was a BOGO buffet meal in Oklahoma. Closes at 183. There it is again. This is important. Why? Because it cannot close above, or one, shorts financially must cover skyrocketing price and the value of the SFS call, and two, liquidity issues would send it too fast before DTCC rules change, pinning shorts between getting margin called and getting bankrupt. Check. So that's our first check. March 26th. Let's move on to the next day. And here we had a strong beginning to the day and then a major red candle sell-off where we eventually consolidated at the end of that day. Getting really close to our current day cycle, guys. It's getting out of control again. Pre-market is on fire and opens at 197. So that 50% dip immediately made up for in basically a 48-hour window. Massive sell walls appeared at 199, 200, 201. We were covering that last week. I remember this popping up for 60 seconds left before open and thinking $200 is the last stand. They aren't effing around this time. Basically, we saw there was $5 million of calls versus $5 million of puts. They were just major battlegrounds that day. Buyers show up and whammy. Short attacks. Seems like this thing gets cooking, starts to boil over real fast. They unload to keep it under 212, ended at 181. That was that day that we were, before WeBull updated asynchronously, we had a 1 cent difference from my prediction. That was fun. Finally, forgot we missed a 9. Oops. Well, I guess this is the 9 days you need to pay attention to. March 29th, yesterday. So yesterday, completely sideways movement. We were drawing wedges, we were drawing ramps, and basically, if you zoom out, absolutely nothing. It was just a boring day. So the 180 sideways, and here we are again back at 183 in after hours. Thesis: 183 is the line in the sand where anywhere above significantly? No. Exponentially increase the number, the shorted shares that are certainly underwater from the mini March 8th and mega March 10th attacks, and not just a few here and few there throughout the day. Each and every one of these shares they dump to make it halt 3 times downward over their lunch break. If bulls can get the price either high enough in the pre-market, we're talking about $200 at the bell, maybe 212, and benefit from buying pressure at open, enough momentum will require the SHS to begin, the short hedge funds, to begin covering in massive buys as they are running real low on ammo to short. Pressure is turning up on the shorts. Price won't go down substantially as hodlers really mean it, making covering expensive. We've covered how much of the float we own as retail investors. We are the whale now. All short-dated $800 calls are expired, so there's no cheap way out. The rules of engagement are changing with the SEC, DTCC, and as of April 1st, federal requirements of cash for banks to have on hand changes. The SLR, which we covered both in 60 seconds and longer form analysis, which will likely give the short hedge funds less access to cheap cash borrowable shares. FTD deadline for the March 10th nuke attack is March 31st, right? 21 days is the FTD due date. However, they 1 may not deliver, and 2 may have to start buying in advance of. Regardless, March 31st is not a prediction date. For what it's worth, not a date prediction, but someone's likely looking for these books given regulations are increasing, and the fear of being audited is what really matters. And finally, their friends are getting margin called, increasing the visibility on irresponsible hedge funds. The time is running out, and if you guys had any questions or specific narrative questions about what happened in March, I would be happy to answer it. But one of the things that you have now been caught up on is the narrative of how GameStop is moving from one place, stuck at 183, moved through a large amount of volatility, and then is returned again like a respawn point to 183 every time. Now that you've been caught up, I would really recommend paying it forward, giving this post some love, right? Go to the source down in the description below, comment and say, hey, I'm from Andrew Mo Money, I appreciated this post, and then come back to this video and give it another look through, maybe give it a like, give it a subscribe, and the bell button as well. And if you are feeling extra much like a Mo Monkey, then joining the Moon Platoon or the Meatball Space Legend tier or the Gorillionaire tier using the join button next to the subscribe button or the Patreon link is your best bet. Thank you guys for watching, and we will see you in the money.